We saw Tyson come out this morning with an earnings miss. It wasn't a big miss, but it was a miss, but it can give us a preview of customer buying behavior as we get a little bit deeper into the year. So Tyson came out this morning. We had a non-GAAP EPS of 8.5. That was a miss by 0.52. They missed revenue by about 250 million. To me, that's not that big, but they did readjust, right, their sales projections for 2023. Going into this article by the Wall Street Journal, the company says sales prices for beef fell by about 8.5% compared with the same period year to year. Chicken prices increased by 7.1%, 1.4% for pork. Prepared food division, I know you know about Jimmy Dean sausage, also Ballpark, rose by 7.6%. So now it expects 55 billion to 57 billion in sales. It readjusted the operating margin forecast for three of its four major divisions, slashed the chicken outlook to a 2% to 4% margin from the previously forecast 6 to 8%. So what they're saying is that prices are getting higher. It's getting more expensive for us to do business. Therefore, our margins are going down. We're getting like what we call margin compression. What we're seeing is that consumer demand softens for premium cuts of beef as cattle herd shrinks, raising the price meat packers pay to ranchers. So what we're getting softer consumer demand. However, cattle herds are shrinking, raising the price that meat packers have to pay to ranchers, right? And we saw this last year. We started seeing this when I was living in Texas. We were talking about the drought and how that was impacting ranchers. And what it did is because ranchers didn't want to lose their cattle to drought, they sold their cattle faster, right? Instead of kind of, in my opinion, letting them get to what I would call full maturity. And that number of beef cows shrank in the U.S. based on the Department of Agriculture, 4% from the prior year, while the supply of all cattle and cows fell 3% from the year before. So Tyson's in a position where they got to pay more because there's less cattle, but there's also less demand for their meat products. And what that does is it compresses their margin. If they had the same demand but were paying a little bit more, they could probably adjust it. But what they're dealing with is less demand for premium beef cuts. We're getting a lot of what we call in economics a substitution effect, where people are saying, you know what? I may not buy meat, I may not buy beef or premium cuts. I may buy chicken or pork. I may even start to look at fish. And then at the same time, there's a less of a supply of beef available in the actual overall market. So they have to pay more to get that beef. And ranchers were talking about this, I want to say, maybe 2 years ago. They were doing YouTube videos out of places like South Dakota. I want to say maybe Wyoming. They don't get a lot of attention, but they were talking about how they didn't like the price that they were getting paid by the meat packers. And they felt like it was a political issue because they felt like the meat packers almost have a monopoly over the whole industry. And this is something that the average consumer is really not aware of because they just know that the meat shows up in the store. But there's a lot of challenges in the meat packing and also the cattle ranching industry that now is starting to affect the consumer, because what the consumer is doing is they're going to the store, they're seeing the cost of meat, they don't want to pay it. And it's often because they don't know what some of the behind the scenes things that are going on in the meat packing and also the meat industry. So let's see how this earnings, right, continues to roll out, because what I think is we're getting a glimpse into consumer buying behavior. What was interesting is that McDonald's had a decent earnings. However, Tyson did not have as great of an earnings. And what we may be seeing is that people are substituting quick serve for eating out. What we're going to look at in the next CPI print is figure out how inflation, eating at home and eating out, and how that has been adjusted as we're getting ready to go into this new year. Hope you got some value from it. David W. Williams, also known as Diamond Dave.